Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets and our co-hosts, the Quebec government, Murdoch Capital Partners, and CAA Advisory, we're very pleased you have joined us for the second day of the Quebec Critical Metals and Technology Conference. Our first presentation is a panel discussion titled The Partnership for a Turnaround of a Lithium Mine in Quebec with Sayona Piedmont. Please note that all today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome our panel moderator, Anu Choquette, Senior Director of Invest Quebec, and our panelists, Keith Phillips, President and CEO of Piedmont Lithium, and Brett Lynch, Managing Director and CEO of Sayona Mining. Welcome, gentlemen.
Thank you.
Thank you very much.
Thank you.
Good day, everyone. Pleased to be with you today and to discuss about the North American lithium and its turnaround. Before we go into the panel session, I would like maybe to talk a little bit about Investissement Québec. Investissement Québec is an economic development agency owned by the government of Quebec that has two major roles. One on the international side, which is his main role is to attract foreign direct investment in Quebec. And the second role is we act as the financial arm of the government of Quebec, and we can invest and provide debt financing to projects in Quebec. It was within this mandate that we invested in the North American lithium mine in 2016 and provided debt financing to this project for a goal to start the lithium production in Quebec. But unfortunately, the previous owners had technical difficulties, and as well the market went down in 2018. So that created liquidity problems. And at that time, the senior creditors decided to seek or solicit investors to restart this project. So it is in this context that Sayona Mining and Piedmont Lithium decided to submit a bid to by the North American lithium mine. So before we go into the panel session, I would like to pass it on to Brett to do some introductory remarks, and then up to Keith. So Brett.
Thanks, Amia. Perhaps I'll start with introducing Sayona. Sayona Mining is an ASX-listed company. We were founded in year 2000. And we are an emerging lithium producer with operations and interests both in Australia and Canada. In Canada, our focus is in developing a series of projects in Quebec. The projects we have in Quebec are five, and they're at varying stages of development. We have NAL, North American Lithium. We'll talk in some more detail later on that. Ortier, Tanzim, two nearby greenfield projects. And then we have two other prospects and projects to the north in the James Bay area of Quebec, and they're called Modeland and Lake Albert. So that's the current activities and assets we have in Quebec. They're, as I said, at varying stages of development. And we're looking to move quickly, particularly starting in the southern hub of Abitibi, to integrate and create a world-scale lithium hub by utilising the various assets at North American Lithium, Ortier and Tanzim. Our partners in that venture is Piedmont, and Keith will talk a bit about that as well. So that's, I think, a quick introduction and summary of Sayona Mining and our activities, particularly in Quebec.
Thanks, Brett. So I'm Keith Phillips. I'm the CEO of Piedmont Lithium. We're an American company based in North Carolina. We're developing what we hope will be a very large lithium hydroxide business in the U.S. and Canada, with all the feedstock being spodumene based, spodumene mineralization based. We have a large spodumene business in North Carolina. We're earning a 50% interest in a large spodumene business in Ghana, in Africa, and we've invested in partnership with Brett and team at Sayona in the respective projects in the Abitibi region, which are all exciting. But the most interesting one today is North American Lithium, which is, in our view, the best located, largest lithium project in Canada. It's largest in terms of mineral resources. It's the best located from our perspective in that it's near Val-d'Or, the mining town of Val-d'Or, with all the people and staff and trades and contractors, et cetera, nearby. Don't have to be flown in, flown out. It's essentially on rail. And it's also by far the most advanced in that it has been operated in the past, off and on over the past decade. As Amio said, it's been on care and maintenance, but with Sayona, we're committed to restarting it at the earliest possible date. We hope that'll be in the first half of 2023. Lithium markets are very, very strong. It's an ideal time to bring this asset back into production as sort of a first step in a business in Quebec that we hope will grow meaningfully in time. Quebec is blessed with wonderful mineralization across a lot of commodities, but certainly in the lithium business. And we think ultimately Quebec will have a lot of lithium hydroxide production, and we look forward to participating in that.
Well, thank you, Keith and Brett. If we go into the panel session, I'm just curious. I'm sure the audience is curious as well to understand better how an Australian company and a U.S. company end up partnering both together to buy a project in Quebec. So Keith, I'm just curious to see how you guys ended up partnering with us.
Well, it's interesting. It started with a phone call, actually an introduction from one of Brett's board members, James Brown, who we knew who at the time was the CEO of a company called Altura Mining. And at Piedmont, we published a pre-feasibility study for a merchant lithium hydroxide plant in May 2020. Merchant plant meaning we were looking to build a plant that would require a third-party source of spodumene concentrate. And James referred us to Brett, and Brett was kind of quick to really sort of seize the opportunity that the OTA project, which was the core of their business at the time, might be the ideal location for us to source spodumene in North Carolina. And as these things happen, the conversation evolved over a series of months to a broader understanding of what the opportunity was in Quebec itself. The OTA asset and North American Lithium are pretty close to one another. There appeared to be an opportunity for us to team up to develop that business and to acquire it and develop it jointly. So we seized on that. And again, we think the U.S. automotive business is going to require over 500,000 tons a year of lithium hydroxide production to kind of feed itself in 2025 and beyond, and that number will grow, 500,000 tons a year. We currently produce in North America about 15,000 tons a year, so we're massively short, heavily reliant on China supply to fuel the growth. So our desire is to be able to produce as much lithium hydroxide as we possibly can. We want to produce it all from spodumene. There's only so much in our mineral resource base in North Carolina, although it's large. So the opportunity to grow somewhere else, we're better than Quebec from our perspective. It's great mineral endowment across the province, but particularly in Sayona's hands. Great location relative to global markets. Great, environmentally friendly, low-cost hydroelectricity, a supportive government, obviously. So it was very exciting for us to have an opportunity to work. And coincidentally, we used to be an Australian company ourselves at the time we started these discussions. We've redomiciled to become American, but it's been great to work with the folks at Sayona.
Good, thank you. Brett, with the past of NAL, I guess as a major shareholder of Sayona Quebec, which is the entity that bought North American Lithium, how do you plan to make it a success by this time, I guess, with the past that we've seen that the previous owners had difficulties. So curious to hear you on this.
Yeah, it's a very good question, Amiel, and I've been looking at it since I guess we started on this turnaround ambition and journey back in 2019. As Keith said, when we sort of first started talking in partnering with Piedmont. I think one of the advantages of having such a long, protracted administrative process was that we got a lot of time during 2019 and 20 to do a really large amount of evaluation and homework on the North American lithium business and what really were the root causes that had impact on it and caused it to fail not once but several times since its original commencing dates back in pre 2012. And what we did in terms of that evaluation was identify a number of issues. There were financial issues, there were management issues, and then, of course, there was the ups and downs of the market. All of those had an impact at certain points in time. But we also, I think, really came to grips and uncovered a common theme that had plagued the business, and that related to the nature of its ore body. And NAL is its ore body is basically made up of multiple, up to 30, relatively thin seams of lithium, and they vary from 6 inches up to several meters in thickness. But it is a multiple seam, a relatively thin seam mining operation with a very steep dip. And that in lithium is very challenging to be able to extract the lithium in terms of a clean and consistent feed grade with low iron contents into the concentrator. And that generally resulted, and we could see that in the records, of very inconsistent and actually poor productivity, yields, and then in terms of quality product, final product of spodumene. That makes it very challenging to consistently, make a profit when the market is moving up and down so much. So that led us to then, coming up with perhaps a step-out solution, but thinking about our nearby Ortier deposit. And, it's only 30 kilometres away. It's relatively close. And albeit not dissimilar sizes of ore body, the Ortier deposit is just one singular tabular seam, approximately 20 metres wide. And it really is a very easy and clean seam to be able to extract from a mining perspective and provide a very good, consistent feed grade with a very low iron content to the concentrator. That led us to, I guess, considering, well, what if we were, because we're in a unique position to have the only deposit, relatively close to NAL, could we actually blend those two ore bodies? And would that allow us to produce that consistent low iron content feed grade that had really been the Achilles heel of the operations? We did a lot of then testing on that with SGS, and it wasn't rocket science. Blending's done in most other mineral commodities, coal, iron ore, and the results confirmed that we were able to achieve a much greater improvement in productivity, in yield, and in terms of the grade of the final product. So that certainly is one of the unique elements that we'll be able to bring, which has never been on the table before for the turnaround for NAL. The other part of the turnaround solution is between ourselves and Piedmont. We're committed to investing over 100 million Canadian dollars to effectively refurbish the plant and bring it up to world-class efficiency and capacity. So with those two combinations, we're feeling very confident, as Keith said, very excited about seeing that move back into production and profitable production very quickly and in early 2023.
Okay, well, thank you. We surely believe in your plan, and that's why we decided to partner with you guys. So maybe Keith, that being said, where do you see Sayona Quebec in 5 years, and how do you see Piedmont's continued involvement in Sayona Quebec?
Well, it's a great question. 5 years. 5 years is a long time. I haven't even been in the lithium business 5 years, almost five, but not quite. But we're very excited. We see North American Lithium as really step one. As we look at the world, there are one or two big spodumene deposits in North Carolina. There's ours. There's the one Albemarle still controls several miles south of us in North Carolina, and there's really nothing else in the United States. There's no spodumene that anyone's found in Mexico. So you think about North America, there's a lot of spodumene in Quebec, and Sayona Quebec has the biggest, resource in terms of tonnage. There are some other high quality projects in northern Quebec, as you're aware. There's some in Ontario, but fundamentally, we think Quebec is going to be a critically important part of the lithium business for decades to come. There's been some false starts with NAL, with different owners, with Nemaska's initial attempt to start up, and they haven't gotten there yet, but I'm sure they will. There are other developments you're aware of that are interesting. And what we think we bring to the table, and we're very happy to be partnered with Sayona. I mean, kind of first mover advantage, the first company to put something in production. Sayona Quebec will be that with NAL. And I think in the market we're in, with the capital we're investing, NAL will be a sustainable business, and it will then be enhanced and improved when OTA is permitted and producing more and the blending opportunity happens. We're hopeful there will be some nice discoveries at Tansom. There'll be some opportunities to grow there as well. But then the next question is, how do we go downstream and produce value-added product? So spodumene concentrate is the first challenge to get that up and running. Ultimately, we want to be in the business of producing lithium hydroxide. That's the lithium salt that you need in longer range vehicles, which we think will dominate the North American market. We're going to do that in North Carolina with one project. We're going to do it at a second plant, fed principally from Ghana, also probably in North or South Carolina. But we very much look forward to doing it in Quebec. We don't have any formal arrangement with Sayona to do it together. We may or may not do it together. We'll figure that out in due course. But we have a good working relationship. I think one thing we do bring to the table is we're fortunate to be located in a suburb of Charlotte, North Carolina, where the lithium industry had some initial roots in Quebec, actually, around La Corne, but really principally in North Carolina, just west of Charlotte, where the Carolina Tin Spodumene Belt is. And almost all the world's lithium was produced in this region from the 1950s to the 1980s. Albemarle is the world's biggest lithium company. They're headquartered in Charlotte. They have a lot of talent in the region. Livent is one of the 2 or 3 biggest lithium hydroxide producers in the world. They have their big U.S. operation in Bessemer City, just down the road from us. So we're surrounded by a lot of talent. We're going to build a big team with real experience producing battery quality lithium chemicals. We already have 7 or 8 people just in our technical team with direct experience doing that. That's rare. The only place in North America where battery quality lithium chemicals are produced is North Carolina. We look forward to exporting that technology, that know-how, and bringing some of that know-how to bear in a place like Quebec. And again, what better place to do it? It's in our time zone. It's very accessible. And we think we can build a very big business. Converting our own resources, but also potentially converting other resources that have already been found in Quebec will undoubtedly be found over the next several years. It's a big province. There'll be a lot of exploration activity. I would expect there'll be some other big resources found. We want to be one of the groups that converts that material into battery quality material to be used in cathode and batteries in Quebec and elsewhere in North America. So we're excited. Step one, and we see a long future for ourselves in Quebec and aligned with Sayona.
Good, thank you. Brett, you discussed in your introductory remarks that you have other, projects that you're involved in Quebec. Can you discuss a little bit about these projects and your future plans with these projects?
Yeah, sure, Anya. Happy to. I guess first, starting with the Abitibi hub that, we're, as Keith's outlined, committed to developing that. And, we envisage that it will become a fully integrated, chemical producer for lithium. And, the site, as I said, it's got a mine. It's already got a pre-existing concentrator, but it's also the original design included a 23,000 tonne a year capacity carbonate plant. And so that's very interesting and would allow us to continue to, explore the possibilities and opportunities to create a real world-scaled hub there in Abitibi. But again, as Keith highlighted, that's only capable of 30,000 tonnes, and North American market by 2030 will need potentially 15 of those production hubs. So we're very clear that we need to play our role and expand our capacity, and also seize the opportunity as a first mover and a leader in this North American market that really does need to secure world scale, secure, reliable supply of lithium, specifically spodumene, to power this renewable energy transformation that will occur over this decade. So in keeping with that, we've recently, only late last year, moved swiftly to acquire another significant resource base, but up north. I mentioned before, Moblan is a project we acquired last October. It is very interesting in that it is of high potential because it's got a 1.4% grade. It's about 40% sort of more grade than we typically have in our UTB deposits. And its stripping ratio is about 2.9 to 1. That's about half, again, of what we have in the Abitibi deposits. So it provides the opportunity to have an even more efficient and potentially scalable resource base up there. So our plans are to very swiftly develop that resource. It's currently just over 10 million tonnes. We'd like to double that and even more. And we've been doing a drilling program since the start of this year to do that. On the back of that would allow us then to build another world-scale concentrator and also move downstream and integrate that into a hydroxide business. So that's the plan for a northern hub that would give us, 2 hubs and would be able to, for us to, really move ahead quickly with the opportunities from both of those hubs to meet the demands in North America. So yeah, I think our approach in the north, and as it has been in the south, is we'll be looking to take little steps, but very quickly, to ensure that we can successfully deliver on these projects and become and maintain a leading position in that North American market.
Thank you. Keith, I guess Piedmont is well focused in production of lithium hydroxide, and we know that North American Lithium has the capacity, I guess, to eventually produce lithium carbonate. But how do you see, and you alluded to the North American market maybe asking for more supply in form of lithium hydroxide, but how do you see, I guess, the lithium carbonate in North Do you see a future here, or it's mostly outside of North America?
No, there's a future. There's, the bottom line is, the world is going to desire and demand dramatically more lithium than we can possibly produce in the next 5 or 10 years. We'll be able to catch up in time. As you know, it takes a decade or so to bring a mineral project like this online from start to finish. So the real ratcheting up of demand for electric vehicles has just started to happen in the last couple of years. Every major automaker around the world is all in, spending lots of money to build EV plants, partnering to build battery plants. And I think they're sort of starting to wake up to the reality it's going to take a long time for the lithium and other minerals to come on stream. But there'll be demand for both hydroxide and carbonate. There'll be shortages of both. In our facilities, the two we plan to build, we could pivot from hydroxide to carbonate. We don't intend to. We think hydroxide is the right thing if you're building a greenfield. If you're building a greenfield project based on spodumene, we think hydroxide probably makes the most sense. That's what Nemaska has intended to do up in Canada, in Quebec. I think that's what you'll generally see. Brine projects tend to be more naturally suited to produce carbonate because they have to produce carbonate as sort of a first step. So there's certainly an opportunity, and if the asset at La Corne, if the carbonate refinery there is sort of capable of producing at the quality required, and that's something that'll be looked at with Sayona and Piedmont over the next several months. That's an option for sure. But our focus, we intend on the one hand to be the biggest lithium hydroxide producer, but we're not going to be nearly big enough. It's going to be very hard to keep up with market demand. Again, if we produce 60,000 tons, that would be a little over 10% of what the U.S. market itself needs in 2025 or 6. That number will double again by 2030. So by focusing on getting really good at hydroxide, we think that's a sensible business. But there will definitely be an appetite for carbonate also. And there's a little bit of a tug and pull between hydroxide and carbonate. Hydroxide gives you more range. It causes potentially some issues with respect to raw material procurement, nickel and cobalt, relative to LFP cathode, which carbonate can be used in, where iron is the main base of that. But there are a lot of advantages from lithium hydroxide in terms of range, in terms of recycling. I don't think you're going to see people recycle a lot of LFP batteries. There's just not enough value in the material, where there is a lot of value in the lithium and nickel and cobalt and manganese in a high nickel cathode battery. So I think recycling will be very focused on that, and ultimately there'll be a big opportunity for us and for Sayona and others. But I think it'll be a win-win environment. There won't be enough lithium. There might be companies that have to pivot from wanting high nickel and wanting hydroxide to settling for carbonate if they have to in time.
Thanks. And maybe I'm sure the audience is curious to see what's your with your closing remarks. What's your forecast for lithium prices over the I guess the next 4 or 5 years? So maybe Brett, I'll start with you, and Keith, you can comment afterwards.
Yeah, I like to think I'm not a punter, so I probably won't pick a number. But what is clear and unanimous, I think, is it's going to, in the short term, certainly, demand is going to continue to outstrip supply. That will only mean that prices will go even higher, certainly remain stronger. And then as highlighted, because of the long gestation period to get the mining operations currently through, then that may well, plateau. But I think it's a very strong, it's a very bull market for lithium and lithium prices for a long while yet. I think the market sees that, and we all see that.
Keith, same.
Yeah, I would echo that. I think, yeah, 100%. I think it's what's a little, I don't know if it's frustrating, but it's surprising to me. Every analyst, pretty much every analyst, forecasts demand outstripping supply for years to come into the next decade, so the next 10 plus years. And most analysts, big industry consultants like Benchmark, et cetera, forecast the shortages of lithium getting bigger every year. So we're going to be short in 2022. We're going to be shorter in 2023. There's a really good study done by Matt Fernley in London. He publishes something called Battery Materials Review, and he shows what he calls material-constrained EV demand. So how many EVs would we sell if there was no constraint on raw materials like lithium? And how many will we sell, in fact, given that there will be undoubtedly large shortages? And he sees those shortages growing until 2030 and then gradually declining over the next decade. So in the face of that, most analysts, regardless of that, forecast prices kind of reverting to historic levels in 2025 or 6 or 7. That would, betray the laws of economics. I don't know how that's possible. So I think we're going to be, Brett talked about plateauing. I think that's quite possible. I think we get to a level where prices are meaningfully higher than historic levels, where EV demand didn't really exist and it was really, mining lithium for glass and ceramics and some other industrial uses. And we're in a mode here where we're shifting the entire economy toward electrification globally. It's not just industrializing China; it's electrifying the entire world. Batteries will be required. Lithium ion is the battery technology of choice. Lithium demand is going to be exceptional. There will be a time when we get to a relatively stable supply-demand equilibrium. It might not be until the 2040s. I don't see how it could possibly be in the 2020s. So I think prices are going to be stronger for longer, and I think you'll ultimately see those prices will lead to a lot of new exploration discoveries, which the world will need. And in the long run, things will stabilize. But Brett and I hope to be long gone by that time.
Well, thank you very much. I think we've passed our time, but thank you very much, Keith and Brett. Good luck with the success of North American Lithium and your other projects. I'm sure your partnership will be a success, and we're pretty glad it's in Quebec, and your future lies in Quebec as well. So
Us
thank
too.
you very much.
Thanks a lot. Thanks, everybody.
Thank you.